Hello everyone, I am Dr. A. Nagalakshmi, Assistant Professor, Department of Commerce with Finance in Dr. SNS Rajalakshmi College of Arts and Science, Autonomous, Coimbatore. I am here to explain the next concept, liquidation statement. The liquidation statement in corporate accounting. First, we should know what is liquidation of companies. Liquidation is nothing but closing down of the company permanently. In the terms of Corporate Accounting Companies Act, we have another term for liquidation that is said to be winding up. Now we can see the meaning of liquidation. Liquidation or winding up is a process of closing down a company and distributing its assets to satisfy liabilities in a specified order of priority. It can be compulsory winding up, that is winding up by court, order of court or tribunal. Next is voluntary winding up by members or creditors. The person who conduct liquidation is called liquidator. So, here liquidation means closing down, the process of closing down a company and distributing its assets to satisfy the liabilities in a specific order of priority. So, there is an order for making the settlement for the liabilities. Okay, before that we should know there are two types of liquidation. One is compulsory liquidation and voluntary liquidation. That is compulsory winding up or voluntary winding. Compulsory means the court or a committee of the government, said to be the tribunal, insist to make the company to close down, is said to be compulsory winding up. Voluntary winding up means the creditors or the members of the business company join together have a decision of closing down, that is said to be voluntary winding up. Here the person should be there to make the liquidation process. That person will be appointed by the court of law, or if it is a voluntary winding up, by the management. That person is said to be liquidator. We can see what is the meaning for the statement of affairs. Statement of affairs. When a company goes into liquidation, the liquidator must prepare a statement of affairs showing the assets and liabilities of the company. So liquidation means closing down. Nowhere it will be existing in future. So it is must to make the settlement to each and everyone who belongs to the company. For that, the company has to, that is the liquidator, the person who is appointed for liquidation process, has to prepare a statement of affairs. In that, what are all the assets and what are all the liabilities there in the company has to be shown. For what? What the purpose? To give creditors and the shareholders a clear picture of the company's financial position. They should know what the company has, how much, what are all the assets, what is the value of the assets, what is the total value of liabilities. Next, to show how much creditors can expect to receive after liquidation. For example, if a company is going in a loss, and due to that the liquidation process is happening, means it is the creditors cannot get the full amount due from the company. They will assess, the liquidator will assess what is the total assets, what is the total liability. If the assets are more and liability is less, then everyone will get the full settlement. But if the assets are less and the liabilities are more, then the creditors will get a certain percentage for their amount. Features. So prepared on the date of winding up. It is a summary statement, not a double entry account. It's a statement showing the assets and liabilities position. Shows assets at realizable value, that is book value, after calculating depreciation. Actual value which can be announced for sale, that is said to be realizable value. It may be that is the value which is offered for sale, and we will get the amount out of that sale. Next, liabilities are shown in the order of priority of payment. So there is a priority. First this person has to be settled, next this, next this, next this. There is a priority. This is the format of statement of affairs. What is a format? Statement of affairs as on. So what are all the items comes on liability side? Secured creditors on specific assets, preferential creditors, taxes, wages, etc. Unsecured creditors, debenture holders with floating charges, then share capital. So these are the items which comes on the liability side while preparing the statement of affairs. Assets not specifically pledged. Cash in hand, cash at bank, sundry debtors, stock, plant and machinery, furniture, land and building, investments, asset pledged, then surplus or deficiency from pledged assets. So here the total liabilities and the total assets has to get tallied. It should have the same value. This is what about the format of statement of affairs. Next we can see the meaning for the deficiency account. Deficiency, the word deficiency itself shows that there is a minus value. Deficiently account explains the reason for the shortfall of asset compared to liabilities. Here that is, liabilities are more, asset is less. It is a real reconciliation statement showing how the company's capital has been lost. So how the capital of the company has lost, that will be shown in this statement, this account. The purpose is to trace losses from trading, depreciation, fictitious assets, dividends, writing off the assets, mismanagement, etc. It helps creditors and shareholders understand why company becomes insolvent. It gives a clear picture about the failure of the company. This is what about the format of deficiency account. Deficiency account as on. Particulars. What are the items shown on the deficiency account? Balance of share capital. Paid up capital. If there is any surplus, it has to be added. The surplus may be in the form of reserves or profits. Total capital at start. Less loss and deficiency. Losses and deficiency. Trading losses, bad debts, depreciation, fictitious assets, that is preliminary expenses, payment of excess dividends, speculation and abnormal losses, loss on realization of assets. So with all these information, deficiency account is prepared and we will ascertain total deficiency. This total deficiency equals to the excess of liabilities over assets shown in the statement of affairs. So it will show what is the failure, in what aspects the company lost its capital. So total deficiency means nothing but liabilities are more and assets are less. Thank you. Thank you so much for the patience listening. I hope you all understand the concept liquidation of companies. Thank you.